Kamyar Rezaie joins me here today, and you could learn what his team is up to by going to wimblesinc.com. That's wimblesinc.com. And that's going to be a clickable link in the show notes. But really appreciate your time here, Kamyar.
Thank you for having me, Jack.
So you've been all over the map when it comes to real estate investing, starting with single family homes and now moving into multifamily. But you seem to have a bigger platform that we probably should spend some time with. But I'd be curious, how did you find your way into real estate investing?
So, how my whole life career started with real estate investing was my father was refinancing an investment property. And I happened to be there while in college while the gentleman came to do the loan documentation. And when I saw the way that he was presenting the customer service, I thought to myself, that was that year I was finishing college. I was like, this, I can do this job a lot better, better customer service. So that's really put a trigger in my brain. You got to do this. And I think you'll be really successful at it. And that was the start point.
Sure. So where did you end up? You started off with single family homes, but at what point or what was the tipping point you moved into your other endeavors?
Sure. I started basically in 2004, which I got my broker's license. I did start with the single family homes. During the real estate crisis in 2008 to 2010, 11, I maneuvered into the commercial platform and all the multifamily, industrial, and everything. And that's due to the clients that I helped with loan modifications. They were mainly in the commercial space. And they said, if you come into the commercial space, we will work with you.
Okay. So tell us a little bit about what you're doing now and how you're helping people.
So what I do now, I do commercial real estate lending and commercial real estate on the investment side and owner. I have a lot of referrals and repeat clients, which I help them purchase their properties, commercial mainly related, industrial, multifamily, hotels. And I do all the research for them. They come to me, they want this property. So I give them my analysis of what's going on there, the numbers, versus if they want to buy it for their own business, we refer them out if they don't have a good CPA to see the consequences and savings if they have the depreciation and so forth, and how it can help their business.
So tell me a little bit about your buy box then. What entails like something that you would consider funding?
Consider funding today's world with the high rates in today's market. There's not much investment side because the rates are too high. So we do a lot of mainly owner users today because it makes more sense still versus renting, people buying on their own for their own building, paying it off on the 25 years makes more sense, especially with the depreciation and basically not having their lease being raised every year. And after maybe 5 years, they're forced to leave that space because the owner of the building either wants to sell or does other plans for it or wants to redevelop it. So
Sure.
I help a lot of my clients based on what their theories are, how they want to go approach it. I have clients that have multiple properties on say on one particular street and their strategy is to own every property on that street. So it's whether it be door knocking, trying to find who the owner of the property is through different avenues. I try to approach them and help my client achieve his goals.
Okay. It sounds like you're more of a boutique one-stop shop when it comes to a lot of this. Do you find that it helps to be able to be in that position and be more of a consultant and handhold some of the individuals that approach you with their first time purchases or establishing what you said is a business?
It definitely does help being a one-stop shop in both in the real estate aspect and on the loan side. I get to control the whole procedure and the client feels comfortable at all times. They're not dealing with two different people. They're saying, okay, maybe the real estate happens, but the loan person can't really fund the deal at the last thing or in the middle. And I have to go find a new loan person. I was able to give them live updates at all times and it takes a lot of their worries away. And they always maybe I deal with their CPAs, I deal with attorneys, I deal with many of their important teams. And a lot of other people in the industry only focus on one niche, but I happen to just focus on both sides where it allows them to feel comfortable throughout the whole process.
Mentioned commercial properties. This seems to be a hot issue right now because it seems like if we do have any kind of real estate downturn, it's going to be in the commercial space. Would you agree with that? And what should people do in preparation?
There definitely will be a change. of pans in a lot of properties, I feel. And a lot of the factors are due to when people during the COVID era got these properties at very low rates, even being a lower cap rate. But today, when they're going to refinance, they have to put a lot of money out of pocket to be able to keep the property because the new rates are on the say high sixes, sevens, or even the eights versus the rates that they got if they got in the twos or even in the threes, right? And their occupancy ratios are totally different. I have clients that have to come out of pocket somewhere between the vicinity of 500,000. I just had a client that has a bigger commercial property has to come out of pocket $7 million just to keep the property. The cost of money today is very expensive, and obtaining money is very hard for many individuals today, either be investors or other sectors. So that is going to be the main issue of people being able to hold on to properties for longer term. Cash is king. If you have the cash to keep onto it, you'll be good. But if you're highly leveraged and in multiple properties and don't have enough cash to put into them, you will lose them.
This is troubling when you think about it. You've mentioned commercial properties, and what we would define as commercial would be like storefronts or office space. With the way COVID hit and the way the economy is right now, it just doesn't, it really seems like some individuals are going to struggle.
Correct. But it also comes down to either being a single family residence or commercial. If you're using it for yourself, for your own business, you will do whatever it takes to try to hold on to that property because you're making money, is paying all your bills on the business side and on the personal side. But when you have a commercial property that you bought as an investment and you have to keep putting money into it, it's going to come to a point. And do I keep it or I just let it go? And especially if you have a non-recourse loan, if there's no personal guarantee on it, so it's not going to hurt you. But if you do have personal guarantee on that loan, you're going to go have to find ways to deal with the bank. So it's got the least effects on you long term.
So when you said you do the loan and you're lending out money, is that personally liable or is it to just businesses?
Oh, I'm not, I'm acting as a broker. It's not my money. I'm not doing hard money. I'm acting as a broker for a bank or
Oh,
for a lender.
okay. So what does somebody have to qualify in order to get the product that you're pushing?
It depends again on the product. Obviously, if it's an owner user, typically where everybody's going SBA, where you're doing it goes 25 year amortization. We always need 3 years of tax returns. There are certain banks that will qualify off the last 2 years of tax returns. Certain bank qualifies off the 1 years of tax returns. And we even have SBA programs that qualify based on projections. But obviously, when you go on projections, it's a much higher rate versus qualifying off 2 years tax returns. But that's in itself, it's like, the banks are a lot more comfortable giving out because, the SBA is guaranteeing a portion of that loan for the bank. But in terms of going for individuals trying to buy investment properties, it all depends on their portfolio or personal financial statement. If they're not strong, a lot of banks will not touch them today. There are even certain banks that are requiring 1-to-1 ratio of how much money you have in the bank versus how much loan they'll give you on an investment property. So, for example, if you have $2 million in the bank, they'll only give you up to $2 million worth of loans on any investment property, not a dollar more.
Makes it hard if you have to do any kind of updates or upgrades or repairs.
Correct. That's also another problem. Construction costs have tremendously increased during the last couple of years.
It's interesting because we're in that kind of political season where it's the evil landlord's fault when it comes to a lot of costs associated with rental increases.
Sure. And that's another, you mentioned a very good point. We are in that time where a lot of people are holding off to see what happens with the elections. So that's a big factor in today's world right now. Starting, I would say, around July, August, a lot of people are on the sidelines until we see what happens in October, November.
A lot of people with the economy the way it is, everybody's being a little cautious.
Correct. And one of the biggest factors right after COVID is the prime rate. We're at all time highs at an 8.25, the prime rate. I'm sorry, 8.5. And then the 10-year bond, which determines the mortgage rate, either being commercial typically or majority of the residential loans, have been pretty high. They have started to come down in the last 2 to 3 weeks, but still the affordability is not there for a lot of individuals. They don't have a lot of the extra COVID money. due to the inflation and cost of lifestyle going up. There's a lot of extra money in people's accounts, and a lot of people are actually hurting every month and going on credit card debt.
Do you suspect that we're going to see a rate cut?
I'm thinking September, based on all the news and everything that's happened, we should see a rate cut. What is it going to be? Very hard to say, but everybody is anticipating it.
What kind of impact, if the rumors are at maybe 50 points, what do you project is going to happen? Will that be enough to see a spur in the economy?
It definitely will not be enough, but it will be a good start. It depends. What are your owings? Because the prime is that's for short-term lending, right? It's on the HELOCs, it's on the business lines. So if you owe 100,000, 200,000, yes, it will affect your payment. But when you're owing, say, 5 million or 10 million, it's definitely going to help you on the extra cash flow.
Hmm. Your website talks about data-driven approach to finding the best sales, deals, and offers for your clients. Could you talk a little bit about that model? What do you do to help somebody find that deal? And are there particular markets that you look into?
I typically deal with the LA market, some of the Ventura market. I tend to focus here. I don't go out of it. That in itself is rather huge. I get all of my data from CoStar. CoStar provides me with any data on any property. They give me an underwriting report, typically between 70 to 100 pages. And I can identify all the different comparables, new construction in the area, past sales in the last 5 years. So any data related to any property I'm able to obtain through CoStar.
LA, that's an interesting area. You don't run into a lot of investors in that market just simply because of the cost.
Correct. LA has its own investors. It's people who have been here longer term, over 20, 30 years. Obviously, you get the new individuals who have come up with certain money that want to come into the game. It's a lot harder. The price to get into the game and keeping it. A lot of individuals have very good contacts with the banks where the properties that are about to go foreclosed, the banks give it to these individuals who have big balances in those accounts.
Mhm.
So it's very referral based and it's very people who have been in the long term.
How have you found that you've been into this for quite a while? Was there a tipping point where you found some success with these individuals?
My tipping point, like I started before, I started 2004, but my tipping point was really in 2011, 12, when I started to deal with a lot of commercial real estate property owners. And I was able to obtain their trust via getting them good loans, being able to save their personal residences. So it was a trust factor and everything that I told them I was able to perform. And that's the main key in the commercial real estate space. There's a lot of individuals that might say some stuff, but if you don't perform, there's no trust there.
Just to remind everybody, you can learn more at wimblesinc.com. If you found some value in what we're talking about so far today, do us a quick favor, share this with one of your investor friends. And if you're watching us on any of the video networks, give us a quick and subscribe. You talked about saving some individuals out of that crisis. Could you talk to a little bit about what happened and what you were able to do?
So during the 2008 real estate crisis, it came to a point where the banks didn't have money, individuals didn't have money. There was not much money to go around. And thus, people weren't able to make any payments. You have people with these two, three, four, $8 million loan balances on their personal residences at the 6, 7, 8% rates. And all of a sudden, there's no cash flow. There's no way to pay them. So they stopped paying them. And obviously, the government stepped in for the lower loan balances. There wasn't really any particular help in terms of what the government was providing. It was on a one-to-one base cases for the banks. So I was able, because I got a little bit of a history with the lower end helping people save their homes, these individuals, based on what was their criteria, what was happening in their business. I took their file, let's say, for example, $4 million loan balance. The individual had a 6.75 rate. They had to make payments about a year and 3 months, let's say. Being able to defer the payments they didn't make as a blow to the end and got them a fresh start.
That's a big savings. I can see why you've gotten popular.
Just trying to help whatever we can do at that time to help. A lot of individuals in my space, they left the space. I would easily say 60, 70% people in the real estate and the loan space went out of business. And there was just not much money to be made. They were all used to getting all these referrals for the getting refinances and being an agent, the easy money, easy come, easy go. When it came time that they to work 10 times to make the same amount of money, they weren't willing to do it.
That also goes to show that banks, they don't want to be real estate investors themselves. They would rather negotiate and try to work something out to avoid that. Have you found that banks are in a similar situation now, especially around the commercial, where there is some wiggle room and some negotiation to be had?
There is right now. It hasn't hit that point, but I do think there is wiggle room with them. On many of them, they don't want the same thing to happen to them that did it. It happened in 2008 to 2011. They don't want their balance sheet filled with REOs because at a certain point, the Fed gets involved when you have a certain amount of REOs on their balance sheet as a bank. So they don't want to get to that point. Absolutely.
Can you share a little bit about maybe a project or something you're working on now and what your outcome is probably going to be?
Actually, I funded a project, let's say about 6 months ago in Temecula. It's for a client of mine as he's in the restaurant industry. This was the first building he was buying. He's very scared. He's should I do this? Should I not? I spoke to a CPA, spoke to his attorney, and then finally I want to move forward with it. Being in the restaurant industry, their tax returns have a lot of write-offs. It's not always the best tax returns, let's say. But I was able to obtain a 10% down for him as on the building. And I also got $1 million worth of construction included in the loan for once he has his permits. We funded the deal about 6 months ago. He currently is about in the next 2 weeks, will get his certificates to start building that building. And he's very proud. So he's, you know what? It's been very unique. I was able also to get a 1 year of no payments on that SBA loan since he had to go get entitlements and everything. He's during this time, he's about to say, you know what? I want to get more of these. So it was a very unique start for him. And I'm very happy for him.
I suppose this happens quite often for you is that some of this information or this is going to be the first time individuals are making such a big decision like this restaurateur he's making and buying his first restaurant. There's you talk about being a bit of a consultant associated with this, but you're almost a bit of a coach or therapist as well in a way to help people get over some of those fears and to the finish line.
Well, definitely. I'm a therapist at times. I'm a coach at times. What I always like to get their attorneys involved, their CPAs involved. Like show they have everything in front of them up front. So as they go through this process, when they fund it a year later down the line, 2 years later down the line, they were exposed to everything up front. That's a very key factor. You don't want any surprises later on. In the commercial real estate space, only on an SBA loan are you able to get a fixed term on the full amortization period. So if you have a, let's say, 25-year amortization, I get them a 25-year fixed loan. So never during that time do they have to refinance. A lot of individuals always do a 5, 7, 10-year fix. And then the client down the line, either if it's a balloon or even if it becomes variable, they have to go through this process again. And it's not fun. Maybe their business has changed. Maybe their income has decreased. Maybe there is had something happen to the family and maybe they're not be able to refinance their property. And I always like to put everyone try to on a fixed position so that you don't have to worry refinance. Now, if the rates do come down 2%, 1%, and it makes sense for them and they're willing to go through this process, yeah, definitely will help them.
Did
Mine, I said, sorry, not to cut you off. And there's never a fixed, full amortized fixed term for any investment properties, though. The max is always 10 years amortized over 30.
with all of the experience you've had, what is the biggest lesson you've learned?
But just what I mentioned, you mentioned everything up front. Make sure all the information is exposed up front, even if it's negative or positive.
Yeah, in the real estate world, that is something that is prevalent. I'm all for being as open and transparent as possible. And it's amazing how, as investors, we're typically buying distressed properties or what have you. So it's easy to fall into the trap of, I don't want to say being deceptive or deceiving, but you might withhold some information or say certain things in order to try to convince, and being transparent and open is always the best course of action.
Absolutely. That's what's very important.
What has
Even if
been
you
your biggest No, go ahead.
even if it's negative information about any property, anything, say it up front. Even if it kills the deal, it's better.
Have you read the Chris Voss book, Never Split the Difference? Oh,
No.
that's one of those things that he brings up in regarding negotiation. And you actually lead with that you have bad news and then you break the bad news because when you let people brace themselves and when you say, I have bad news, and then actually deliver the bad news, their imagination is actually going to pump the prime them for something worse than typically what you are going to say.
Definitely.
So, what's the biggest win you've had so far?
Biggest win, I had a commercial deal recently. It was about 12 million. It had gone through two other loan brokers to be able to do the deal. They were not able to perform. And the file came to me as a referral. And he said, what can you do? I looked at the file. I said, I understand why the other two cannot do the deal because of the way it was structured. And it had some hair on the file. And basically, what I told the bank, I'm like, look, they went to two other banks. They weren't able to do it. The reason for the file not being done is this is the issue. There are, positive factors that can overcome this, but are you willing to entertain it? Be upfront, give me 1 or 2 days, tell me if you can't do it. I don't want to waste the client's time later down the line. He might come back to me. The bank went, looked at the file, took 3 days. I said, if you can't take this file to the loan committee upfront, it's that sensitive. And I was able to overcome it. I got a positive. I was able to give it an LOI. The underwriting did take a little bit longer. We had to make sure everything is documented, CPA letters, CPA financials, and all this stuff. And we were able to fund it within 2 months and about 2 weeks, 2.5 months. So
Well,
I was very happy.
I'm sure the bank appreciated you being upfront at the beginning as well, pointing out what could derail this opportunity so that they're not wasting any time.
I typically do that with the majority of my files. I look at the whole file. I know what the banks are looking for. I tell them, look, you might have a problem with this, you might have a problem with that. Here's the financials. Then in this 3 month term of the year, let's say my client was moving and he numbers might be lower due to that. And I document it for them. Here's why they're moving. Here's the bank statement showing less cost, but here's the location and location. But overall, our trends are good. So if you tell them upfront with the instruction, they respect you much more.
Sure. Kamyar, is there a question or concept you wish we would have covered so far today?
No, everything. I think we hit the major points. What I always recommend is study your property. If anybody out there is listening to this podcast, was looking at a particular property in the United States nationwide and wants a underwriting report or anything, they can always email me and I'm willing to help them.
And you can learn more at the website, wembleysinc.com. That's going to be a clickable link in the show notes. But if you're ready, we'll jump into the rapid fire questions.
Sure, go ahead.
First of all, what lie do real estate investors sometimes tell themselves?
What lie? This is a good property without knowing all the facts.
Yeah, I agree with that. Sometimes we fall into this got to get the next deal, or we'll try to convince ourselves that it's a good deal when we need to stay unemotional. If you could go back in time and give your younger self one piece of advice, what would that be?
Be patient.
Okay.
As you grow older, you're a lot more patient and you listen more versus just speaking your mind up front.
Do you have a book recommendation or what are you reading right now?
Investing into commercial real estate.
Okay. I'll see if I can find that and put that as a link in the show notes. And then finally, what single strategy, process, or tool have you implemented that has had the biggest time saving impact to you or your business?
Underwriting report from CoStar for any particular property.
Yeah,
Sure. It definitely gives you all the information. CoStar in itself is expensive, but it's worth every penny.
Kamyar, this has been a great conversation. One last time, you can learn more at wembleysinc.com. That's going to be a clickable link in the show notes, but really appreciate your time. It was great meeting you.
Thank you very much. Thank you for having me.